Hi, everybody. Welcome to another episode of 10,000 Roads to Financial Independence. Today, I have Deepika Sharma. Deepika is an experienced commercial real estate investor with great knowledge in commercial real estate transaction negotiation processes. She specializes in apartment syndication. She and her husband are principal and owner of over 900 units in Texas among 4 properties. Deepika worked in the corporation world. She worked in IT before she transitioned into this new world of hers, and basically following her passion for real estate. Welcome to the show, Deepika.
Thank you, Elisa. First of all, I would like to thank you for giving me this opportunity to speak on your podcast. I'm excited and glad to be here. And myself, as Elisa already mentioned, that I am a full-time multifamily investor and syndicator. So far, I'm a GP in almost 900 units, including the one that I'm currently doing, and then invested in total of 1,100 plus units or so. And in the past, and I have I'm a founder of Hanu CRE. That's my website, and we mostly focus on acquiring B and C class value add assets. And I'm currently I currently own 4 that I'm as a GP. And in the past, I have worked in IT as a software engineer. I was like that was a full-time job for me until 5 years back. And then I slowly that was kind of really time consuming, and a lot of time goes in that, because me and my husband, we both were in IT. He's still in IT. He still has a W-2 job. And but it was getting kind of too much away from my son, so I wanted to spend more time with him. And that's why I wanted to take a job, or take up some career that helps me have a flexible hours and spend more time with him, at the same time make good amount of money. And that's how I started in real estate. I was passionate about real estate from the beginning, even before I started doing it. So that's how I started, in real estate.
That's awesome. That's awesome. So thinking back, what kind of like the person or incidents that kind of helped you shaped become the independent entrepreneur who you are today? Can you kind of give us a little bit insight into that mindset, how that's being formed, and who influenced that?
Well, I would say again, when I started in real estate, I was exploring options, where we kind of, have some passive income, or kind of a cash flow assets where we can, bring in money and spend more time, on vacation or stuff like that. And that's when I was exploring options, and I was introduced to multifamily from one of my neighbor. I was introduced to a mentoring group, and when I went there and I saw people who are doing multifamily syndications, and who are investing in multifamily, and the kind of potential it has, it gave me a path forward. I would say that was probably a kind of a turning point for me, where I see that people like me can do so much more than just making regular stuff, and you can grow like big in this, because it has a lot of potential. And that's where I started doing my multifamily, and I never looked back. So
That's
that's
awesome. That's awesome. And you spoke about so how did that transition when between your IT job and become fully engrossed inside of real estate? Like when that journey happened, did you kind of ease it into it, or did you, just kind of burn the
It
ship?
was, yeah, it was a quick shift. I just quit my IT job, and I started working on getting my real estate license. And I got my real estate license and slowly started. I mean, that was like, when you initially start in real estate, building a rapport, people knows you. It takes some time for people to know you, right? So
Yeah.
that's how, I started slowly in single family, basically selling and helping people sell and buy single family, just like any other real estate agent.
Mm-hmm.
And I think in the first year was a little slow, and then slowly started getting better. A lot of people knew me, and and then I added on to it by taking a loan originator license, so that I can be a one-stop shop for my my clients who can just come to me for purchase or sale of the house, and at the same time I can provide them with the loan options. And that's how I took my license. And then after doing that, and it was going pretty well, and but then again, as I told you, I was looking for something where I can create a cash flow for myself, and I don't have to be showing houses and
Right.
be,
Income.
have
Yeah.
a commission based job. I want a constant income where I every month I get something coming, every check coming in from least involvement. And
Mm-hmm.
that's when I was exploring options, and I was introduced to multifamily at that time.
That's
And that was
awesome.
in back, I think I started in real estate in 2016, and then 2018 is when I started in multifamily.
Oh, I see, I see. Yeah, so that's great. That's actually a great transition because it's coming from the active income into different types of active income, mostly on commission, and then kind of go into like then putting them to work or putting the money kind of to work.
Right.
And then also probably building the clients set from there as well.
Right.
And so what would you say? So you talked about your real estate, like when you first become a broker, building a relationship that take a little bit time. How long did it take you, to kind of build these relationships with real estate with people, essentially your clients? And then how long did that take you to kind of get your first either listing or selling, being someone's buyer agent being hired?
Well, I would say it was 4 to 5 months from where I started. Initially, when I started as a real estate agent, I think 4 to 5 months, it was more of training period where I was kind of learning the processes and stuff like that.
Hmm.
But yeah, and then that's when I got my first client as who was who was a buyer.
Hmm.
And after that, it was constant thing. And I think that's my strength, building relationship, and being able to approach to people. And after that, what I believe is, if I was I gave them good service, and after that, a lot of business I got from the referrals, because they liked working with me. And that's how I got my clients going forward. And
Yeah.
yeah. Yeah.
And then so can you give us some example, because I think that's so important, building the deep relationship. It transitioned into multifamily as well, building the relationships, potentially having clients, investors that investing with you, that kind of goes along with it. Do you have some good tips to kind of share with our audience on what do you think your unique ability is when it comes to building relationships? What are some of the tips that you can share with our listener over here to build that long-term relationship?
Yeah, I think for me, I think it's more about being very the work ethics, and also the honesty that helps us, that helps me connect. I am very transparent. And and another thing is, I like to know about people. I like, I'm always curious, how I can help them, how we can maybe work together sometime, and
Yeah.
uh, stuff like that. And that helps me. And yeah, I think that's about it.
That's awesome. Yeah, it's kind of really focus on the other person.
Yeah.
And so kind of fast forward, can you tell us a little bit more about your first transaction with multifamily? How did you get it done? Because the from the 0 to 1 is the most difficult. So how did you kind of get on that journey, and how long did it took for you to get your first deal?
Well, I think that's an interesting story. I would tell you, I started as I told you, 2018. And, I was, initially it was more of learning curve. And then from the beginning, I was focused on syndicating my own deal. And 2019 has been a little bit, of a struggle, because I had put so many LOIs on multifamily deals, and got to best and final, but I couldn't get one because it is like, I was mostly focused in DFW market,
Hmm.
and it is a competitive market. So definitely, and at that time I was, but then all those relationships eventually helped me, and I was able to get my first deal. I mean, I did I co-sponsored a deal with another group in February of 2020, and that was closed in March. And then after, just at the same time, I got my own deal as a lead sponsor. That was just outside of DFW in Tertiary market. And I mean, it was, I think, I what led me to that, to get that first deal, was all the relationships that I built during that 1 year, and my constant try to get there, and being persistent, I would say. I mean, there was at time it was disappointing, and when you are like so close, and you're like, you just there and you don't get it. So
Yeah.
but yeah, but it's, I think it's all a journey, and I think persistent is the key, and keep pushing until we get there. If, like, if I would have thought, okay, no, probably it's not for me, and gave up, then I wouldn't have been here today. So I would say, I mean, was a year journey, but everything, it was a learning experience. I mean, everything that I've been through definitely helped me get to my first deal.
That's awesome. And so just for our listener, they understand the scalability in this. If you were to look for your own deals,
Mhm.
how many deals would you say averagely that you underwrite a month or a week, like in order for you to kind of get to that? Or how many deals have you looked and offered on before you get to that first year? Like it took a whole year to get to that first deal,
Mhm.
to get to that volume. Yeah.
I would say I underwrote like maybe 50, 60 deals in that 1 year. And I put an LOI on more than, 20, 25, or even more maybe. I don't have the exact count, but that's the approximate number.
Yeah.
And I think, yeah, so 20, 25 LOIs, and, maybe 60 or more under deals that I underwrote in that 1 year.
Yeah, yeah. So that's like the volumes that you need to kind of build your pipelines too.
Yeah.
And then so once you kind of finally get that first deal, how did you actually get it across the finish line? Is that then remaining as the easiest? Or what would you say the hardest part of that first deal is?
Well, I think it was probably, I would say it wasn't that difficult, I thought, but it became a little bit challenging because of the circumstances at the moment. When we went under contract, at the same time COVID hit, the market. It was, I think, we went under contract on February of 2020, and March was when things started going south. Like, with
Yeah,
COVID was declared a worldwide pandemic, and markets was crashing. And at the time, it was like, when we started, we were excited, and we were pretty confident about that deal, because it was a great cash flowing deal, and it is right now performing really, really well. So we were very confident at that time. But at the time when things were very unstable, people were nervous and everything. At the time, we were raising funds for that deal, and it became challenging at the time to raise funds, because people were getting cold feet. A lot of, because investors didn't know if they should go ahead with this. They did not know how the market will turn out to be, how things will turn out to be, like, after this ends, and when will this end. Nobody knew that. So
mhm.
it was kind of challenging at the time to raise funds, but we pulled through it, and it went well. Like, it was all, we closed on time. So people, I'm thankful to my investors and my team, who stuck together to achieve that goal of getting it across the finish line. And
Yeah. That's
yeah.
awesome. And then you pretty much like got your first deal during the worst time to raise money in.
Yes.
And then so what would you say did you do anything to the deal? How do you actually mitigate the risk that was kind of at the time it seems to be written on the wall, not hindsight 2020.
Mhm.
It'd be a great time probably to buy it. But like what did you kind of do? Did you renegotiate some parts of the deal? How did you like kind of made it so it's mitigating these risks that is looking like looming for that market? Yeah.
Yes, basically, yes, we did renegotiated the terms with with the seller. And because at the time, when we were trying to close that deal, like when we went under contract, we did not know that a reserve requirement from Fannie Mae would come into the picture, because it was just introduced at that time, and they wanted reserves for 1 year reserves for PI. So then at the time we were like, our numbers went a little off, because that's what we have not predicted, because when we went under contract, it was a different situation altogether.
Right.
And so that's when we went back to the seller, bringing that up, that this is a new requirement from the lender, and we have to meet in the middle, or you have to we have to work around something, because that way the numbers doesn't make sense, and it is not a it would not be a good, then our investors would not be happy with this kind of numbers. So that's when seller did understood the situation, and at the time we agreed that seller would take care of all the reserves at the time, and also reduce the purchase price to certain extent, basically give us some working capital, take care of the reserves, which we will be kind of returning them back once we get it back from Fannie Mae. And
Yeah,
yeah,
that's
so
awesome.
that was a yeah, interesting
Yeah,
thing
so
to happen at that
that's like
time.
a
But
really
yeah.
refreshing in a very competitive market where you could have kind of built that. So I think it kind of goes back to like how, again, how do you kind of find the deal, building these relationships? You probably had a very deep relationship with the broker on this one in order to have that person to kind of help you write it up. Yeah.
Yes, that's correct. I mean, definitely, as I told you, right, I was submitting LOIs, and during that time, and because I was doing it with a lot of same people, I was working with the same people, getting the deal, they were sending me deals, and I was underwriting and putting LOIs, and
Yeah.
they knew that I am in this for good, and I'm serious about this, so they trust me, and they know that this will and that's what helped me in, during that deal as well. They were like, they know that we will close, but this is just a very unpredictable such situation that came
Yeah.
across, and nobody knew, even seller didn't know about that. So
Yeah.
uh, so that's why they seller agreed to work with us on that. And
Yeah.
definitely the relationship with the broker helped us with that. And on top of that, we had, like, our mentorship group has a good relationship with the broker as well, and
Mhm.
that helped us there as well with their, we could leverage their reputation of closing all our deals, and
Yeah,
that helped.
that's awesome. That's awesome. Okay, so fast forward, you're now owning all these properties, and your first property is kind of in the tertiary markets in, the near the DFW area. But
Mhm.
now you have a few property in Houston and the co-sponsor deal Houston, and also like a property in DFW, a couple properties in DFW. What would you say the characteristic difference between the two market? Would you recommend going one versus the other? Now, hindsight, kind of 2020, looking into that.
I mean, my tertiary market deal is doing really good. I mean, is it okay if I talk about the numbers
Yeah,
on that?
yeah, we love
So
numbers.
yeah, so I mean, we distributed 18% cash on cash on that deal in year one.
Yeah,
So our investors were like really happy, and like overwhelmed, or like really happy and excited to hear that. Okay, and we, for second year, we are, I think, probably doing 14% cash on cash, whereas our projections after we adjusted our underwriting for COVID related, foreseen unforeseen issues. We projected around 11 to 12%, and our investors are getting much more than that. And so
yeah,
I really think tertiary market is a great place. I mean, as long as numbers make sense for you, and I mean, if deal makes sense by number wise, I think it's a good place to invest on. And then another thing is, like, the market that we bought in, they did not have, like, they had shortage of apartments, so
mhm,
that kind of helped us. And our rents were lowest in that market, so a lot of things that that was favoring that deal. And we had full confidence that it will outperform our projections, and that's why we moved forward with that. But yeah, I think a lot of tertiary market deals are good, but I mean, as far as from investors perspective, I think investors are not very comfortable investing in tertiary markets. But but I, as a sponsor, I think my tertiary market deal is doing really good. So I think it is a good idea to buy there. And as far as like, DFW, definitely, DFW is growing market, and it is, that if you buy a deal here, it will perform. And the second deal that we bought in November is doing well as well. We did like, the third deal, we haven't closed that one yet, but the second one that we closed in DFW, we're getting ready for distributions on that in July. So that one is doing good as well. So I mean, primary market, I mean, DFW is definitely a great market to invest in. Every It's one of the top market in US. So
Mm.
if you buy a deal, I mean, I think the positive would be, a lot of people know the market very well, so they will have like, they can evaluate the deal pretty quickly, and investors are more comfortable. So that is the plus point of buying in, primary market.
That's awesome. Deepaka, so the question I have is, what do you think was the most challenging, kind of during the not necessarily full cycle, but during the ownerships of your projects from acquisition to asset management? Like, especially you went through a whole year in coronavirus time. It's probably the toughest time to start doing this career. So if you summarize what do you think was most challenging and how you overcame that?
So I think, what I would say is, Elisa, I think most of the multifamily owners are facing this challenge right now of building currency, and that's because, a lot of people are, like, lost their jobs and are not able to pay rents, and there are others who are just not paying because they think it's okay not to pay. So kind of, so that is something that was something pretty new, and it was like, because both of my deals were closed in pandemic time. So constantly working with our property management companies to file for any kind of tax rent relief that, we can get for our residents, and that way they will get some help. And because everybody's going through a really hard time during this pandemic, and people lost their jobs and they need help. So we were constantly working with our property management team to reach out to our residents, and invite them and help them with, all the rental relief programs that, they can get help from. And that's how we mitigated that. And I mean, fortunately, we did get a lot of approvals for our residents, and that helped us. And that was probably the most challenging thing, as far as asset management goes, in during the pandemic.
That's awesome. So the other question I have is, so what is from here now? Looking out to 5 years, 10 years, what is the goal? Because now you have reached financial independence. I'm assuming that you have been scaling down from your other real estate involvements, such as like the more active ones, like your residential real estate, brokerage and loans and etc. So what is kind of like a next 2 years, 3 year, whatever the midterm for you look like, and what is that long term vision for you?
Well, I would say, yes, of course. I'm very close to, like, being financially free, but so I'm mostly involved, more focused on multifamily than, anything on real estate side. I mean, I do real estate partially, but less. I'm more focused on the side. So for I think that would be my focus for coming a few years, and our target is to. And another thing that I would like to change, like, I want to build my systems. That's what I'm focused on right now, building systems, trying to hire some help where, where I can outsource some of my work, which is like, which I can get help with, and that way I can be more focused on, getting more deals, and managing the assets and stuff like that. So that's, I'm trying right now, focused on building my systems and expanding, my portfolio as much as I can.
Yeah, that's awesome. That's awesome. And kind of reaching the financial, and then what did that real estate investing brought you in terms of like work-life balance? Because you mentioned before that you wanted to spend some more flexible time with your kid. And then so what did that change? Like, being an entrepreneur, what did that change your life in terms of just aspects of
Well,
it?
I think the thing is that's what I'm saying, that I'm not quite there yet. Like being like time, I still spend a lot of time in my asset management, because I have like two properties that I currently I'll manage personally, and I look at every aspect and make sure that things are running smoothly, and our business plan is being executed and everything. So I a lot of my time still is kind of I am quite involved right now, and that's where when I'm thinking of building the system so that I can outsource some of my work eventually, because the more properties I acquire, my work is going to increase, and that's when I want to free up myself, that so I'm working on that. But yeah, definitely, I mean, there are like times that I have more I mean, I can do more with my son. We can travel a little more than before and now, but I want to improve upon it a little bit more involvement in this. So
That's awesome. So, we always wrap up our show. The last question that we usually ask is about, like, because you have children. So, what are you doing now to kind of help them in terms of reaching their financial literacy, or helping them to kind of become more financially informed, and so that they can be set up successful for the future?
yeah, I would say like my son, he's like involved, he has his own stocks account custodian. He invests in stocks, so he is like he's really into all this, and he helps me underwriting. I mean, he does all initial underwriting on whatever I the deal that I think, okay, this is what we should underwrite, and he does the initial underwriting. He knows how to underwrite very well, and then I review it and make the adjustments and teach him along the way. And on top, and he is like he has that end, and like from the beginning, because me and my husband is right now investing in cash flowing assets, and we talk to him about cash flow and how being an entrepreneur, the growth that you can achieve. And so he has that mindset of and his goal is to become an entrepreneur one day. He doesn't have a goal of becoming a doctor or an engineer. He wants to become an entrepreneur. And he looks up to Jeff Bezos. He reads about him. He's like he wants to become the richest person in the world. So yeah, so I mean, he's pretty educated, because he sees what we are doing, and he gets involved in this, and he takes interest. So I would say, yeah, that is something he has that, I think, mindset of abundance. That's what he has built. Seeing us doing all this, that you have to keep trying and striving to become better version of yourself every day.
Yeah, that's awesome. And how does people contact you or find out more what you guys do?
Well, I can be reached at like Deepika at hanusiari.com. That's my email address. And if you want to look me up on Facebook, or you can find my website. It's called hanusiari.com. And that's where they can reach out to me. There's a contact information, and they can email me, or um, you know email me, and I will be reaching back there to them.
That's awesome. That's awesome. Thank you so much for your time, Deepaka, today on our show. We really got a lot of insight from how do you kind of do your first deal inside of the Corona time, and what it takes to kind of operate these deals during the hardship times and actually coming on top. Thank you so much for your time today.
Thank you. Thanks, Elisa.